Good afternoon, everybody. Welcome to this week. Boy, what a week it has been. Holy banana bread. We're going to get to the news here in just a second. But before we get to the news, you guys will notice in the chat, there's this new thing going on where you got these little, what do we call it? Crowns and numbers. So kind of explain it. I didn't know what it was last time it showed up. I know what it is now, but in a nutshell, the more active you are in the chat, it gives you experience points. Those experience points add up. So from posting, I think if you just every post you post, I believe you get 25 points. So 25 experience points. And there's a leaderboard at the top. If you look up at the top, you'll see a little crown and it should show how many points that you have. But if you click on it, and now I'll have to click on it over here, it will show you the leaderboard. So right now, Jonathan and Cowboy both have 50 experience points. They're sitting at the top. Then everybody else is tied. So we got Mark, Muggsy, MC, and King of Day. You're all tied. So this is some new feature that YouTube has. They haven't rolled it out to everybody. Apparently, they've given it to some people, and they're going to roll it out wider later. I guess I'm one of the lucky ones who got this. So this is a little thing for basically it's for bragging rights. That's the way I'm looking at it. It's like if you want to be the number one, just post. I think you get a whole bunch when you do like a super or if you gift a membership, things like that. I think that will give you more. So just something to keep in mind. It's pretty darn cool. It is pretty darn cool. All right. Before I get to the chat, a little change in format. Last week, we jumped right into story number one, right off the top of the show. We're going to do that again this week. We're just going to do that. And then story number two, it's up to you guys. If you guys keep talking like crazy, we may not get to it until hour two, but we're going to try that. We're going to try that. I think that's kind of cool. Number one story this week, believe it or not, is not Trump and the tariffs, although it should be. It should be number one, but right now, and this kind of is a tariff-related story. Our GDP, our gross domestic product data dropped on Friday. So for Q1, our GDP coming in at 2.2%. That's well above the estimate. They were actually predicting that it was going to come in around 1.3%. Last quarter, by the way, it came in at 2.1%. That actually was revised down a wee bit. Now, in addition to our quarterly, we do have the March GDP data. And of course, that GDP does get included in the quarter, but March itself came in at 0.5%, up from 0.1%, which is what was expected. Previous month, we came in at negative 0.2%. Now, April, we do have a preliminary. So preliminary numbers for April, we're looking to come in at about 0.1%, which is, once again, above the estimate. The estimate for April was a negative 0.3%, but it's looking good. So what's going on? A prime driver of this GDP, well, we had a 1.6% rise in exports. And you know what that's all about? That's all about them tariffs. So that's thanks to many U.S. companies they're stockpiling. They were stockpiling the first part of the year because tariffs were coming and they could see it. And they're like, well, let's fill up our warehouses to the rafters. Let's buy all the Canadian stuff that we can so that we can at least sell that stuff tariff-free. So that's interesting. And this actually worked in both directions. So there was also a slight increase in imports as some of the Canadian companies were thinking about, let's get our U.S. stock up before the retaliatory tariffs sink in. So that's pretty much what's going on. That's pretty much the story of that GDP. Overall, though, household spending, and this is more data that came out with the GDP report, but overall household spending actually did decrease by 0.3%. There was there was an overall stagflation. So not stagflation per se, but a stagnation of final domestic demand. Basically, what that means is that total demand for goods and services in Canada, there was no perceivable movement up. It was flat. It was stagnant. There were mosquitoes brewing in it. That's how stagnant it was. Now there was some growth in business investment, mostly in machinery and equipment. That was up by, and this is an impressive number, that was actually up by 5.3%. Now, here's the big question though. This coming Wednesday, Bank of Canada, they're coming out with their June meeting. And, one of the questions is, are they going to cut that rate again? Well, how does this impact it? Well, not in the, if you're hoping for a rate cut, this has had the opposite effect of that, because it shows our economy still being a little bit stronger, and that will keep, with food prices still being up, that's going to keep that rate steady. So before this report came up, the odds of us staying steady with the rate and not cutting was 75%. So now those odds have gone up to 82%. So all likelihood on Wednesday, that rate's not going to change at all. It's just gonna hang out where it's at. What can I say? Oh boy. All right, let's get it. Now that we've got the first news story out. Oh my God, you know what? This is hilarious. Guys, I actually had a picture. I forgot to hit it. I just got so excited about jumping into that news story that I forgot to put the picture up. So I gotta have the picture. I put time and effort in these pictures. So they have to come up. They have to come up. All right. Let me jump into the chat. Obviously, first into the house, Jonathan with "Am I late for more tariffs?" Nope, you're definitely not. Cowboy is in here with a "Greetings all." Hello, Cowboy. Glad to see you got the. I did send you the link because I know that Cowboy was looking for the link earlier and wasn't finding it. Bismarcky says, "Good afternoon, everyone." MC in the house. Hello, MC. Bonjour. Good to see you. Good afternoon, everyone. Pretty lame weather over here this weekend. Oh boy. Yeah, absolutely. Now, I am, as you guys hopefully you know, if you don't, now you do, I'm in Ottawa. Now, MC's over there in Montreal. So we're like a hop, skip, and a jump. Like, I think if you jump in a car and you drive really fast, you can probably get to Montreal not that much longer than an hour. If you drive a reasonable rate, though, it's probably closer to an hour and a half to 2 hours. But it's not far. It's not that far. And yeah, right now I look at the window. It's gloomy and it's cold. I've had to wear my hoodie around the house. That's how cold it has been. All right, King of Day in the house with a hello all, happy Sunday. Fantastic. Gotta love it. Gotta love it. And let's see. Muggsy says, ruined a perfectly good shirt. Yikes. Yikes. How did you ruin a shirt? I don't know. Let's see. Cowboy says, are we playing checkers? I've been crowned. And as I mentioned before, those crowns, those are keeping track of your interaction. So like I said, I believe it's 25 experience points for each time you make a post. And you get more if you do like a super. I don't know how that works. If we get a super today, we'll take a look and we'll see if it'll show us. I don't know if it'll show us, but we can go into the leaderboard and see if it gives us a general idea. All right. Jonathan says, "Go King of Day." Max R says, "Hello, everyone." And I didn't turn off the Nightbot. So you know what, guys? If you guys want a Friday show, if you do it today, I'll honor what the Nightbot is saying, of course, but not intentional. That's normally on Wednesdays when we do the market close. I give you guys that opportunity for a Friday show, but heck, if you want to do it today, you're more than welcome to. Mario says, good afternoon, everyone. King of Day, free membership already. Thanks, I appreciate it. Yeah, you gotta love that. You gotta love that. All right. And the merch sale. Yeah, there's a merch sale going on. I'm basically testing coupons, but if you've been eyeing merch and you want 15% off, there you go. There's the way to do that. Jonathan says Ameristock is climbing despite the Nova Scotia power hack. Interesting. Interesting. I haven't really looked into that Nova Scotia power hack. So now I'm kind of curious. I may have to look into that. Bismarcky says, is it too late to sell in May and go away? Well, yeah, you can't sell in May anymore. Today's June. Wow. It's amazing. Like we got what, 21 or 20 days or so until the summer hits. I'm liking that. But now the Weather Network has dropped some of their preliminary forecasts for the summer, and it looks like it's going to be above, pretty much coast to coast. It's going to be mostly above average. So it could be a warm summer, guys. It could be a warm summer. If you've been holding off on getting an air conditioner, then you're thinking, well, is this the summer I want it? Maybe. So we have to take a look. MC says, did you receive the Air Canada offer from Wealthsimple? If yes, could you explain why they are doing this? Air Canada offer? No, I did not. The last offer I got from Wealthsimple was some AirPods. Like if you bring over, or if you transfer in 25,000, I think they would give you some free AirPods. But yeah, I have not seen the Air Canada one, so I can't explain it. I'm not sure. Is it like, are they offering to fly you like with tickets or something? I don't know. Rory says, let's see, good afternoon, Canada. How do you like TradingView as your source for charts, news, etc.? I do like TradingView. TradingView has a lot. And it's interesting. I'm always digging a little bit deeper into TradingView because sometimes it has stuff in there that I'm unaware of. But I do like, and we're talking even just the free version has a lot of data. So there's a lot of stuff there that other charts, some of them will actually paywall some of it. So far, yeah, I'm a big fan. I'm a big fan of TradingView for sure. King of Day says, hoping for another rate cut, mortgage renewal due in August. Oh, well, there is that 18%. Maybe. Now, of course, one of the other big things in the news is Trump. Trump went and doubled. He went and doubled the tariffs on steel and aluminum. Now, that apparently begins on the 4th. So we do not yet have what our response is going to be. But a lot of times, the Canadian government, until they actually receive the paperwork, they usually don't jump on the response. Because as you guys know, Trump says a lot of things, and sometimes he never follows through. But we're pretty sure he's going to follow through on this. Trump in an Oilers shirt. Oh, yes. So I was trying to think of something I could have for the thumbnail. When I was looking at the thumbnail, I was like, you know what would be funny? Putting Trump in an Oilers suit would probably annoy the hell out of Trump. All right, there's a winning point right there. Then I was doing, and I'm like, you know what? I should make his player number be 51 because he wants Canada to be that 51th cherished state. And then, of course, I wanted to make sure people knew I was not supportive of Trump and the 51st state because I like Canada the way it is. So that's why I put the X through it. But anyway, yeah, that was kind of the thing. I was like, it might spark some curiosity for some new folk who are just passing through. And it's like, let's check this out. Let's see what's going on. All right. Max R says, I think this week will be a red week. I think you could. I don't want to say you're right, but there's a possibility. I think what we're going to see this week is obviously there'll be the fallout of, of the whole the new tariffs, the new 50% on steel. So That's going to be big. Now that's going to be very devastating to Canada, um, because right now, and this is kind of part of the reason. One of the reasons he went to this is that wasn't a strike directly against Canada, though Canada's pretty much in the headlights on that one. He was looking at steel, and even with the 25% tariffs, a lot of U.S. companies were just sort of eating those tariffs and still ordering their steel from like Canada and other foreign places as well. So he was kind of, I think it annoyed him, and Trump was like, nope, they need to buy American steel, so let's double it. Let's double it. Let's shut that door. And that effectively is kind of what he's done, because now we're in a situation with Canada. What we're going to need to do, what the premier, well, not so much the premiers. I'm going to lay this on the Liberals. They're going to need to look for some steel deals out there internationally. Who can we sell our steel to? Let's find some new buyers, because effectively, with a 50% tariff on steel and aluminum, the border's pretty much shut to to our product. Nobody's going to buy it at a 50% tariff. So yeah, we effectively do. We need to find some new customers. The Liberals need to find some new customers. I personally don't know anybody who's out there, internationally buying steel, but I'm sure they're out there. All right. Cowboy says, Timber Creek Financial is still lagging, thinking it's time to say goodbye. I haven't said goodbye to TF. Like, I was thinking about it. I actually ended up saying goodbye in the challenge to RioCan. So I got out of RioCan before they, they had already just begun their slide, but they faced a little bit because of the whole thing with Hudson Bay. I still like Timber Creek. I still like them. I look at the size of the dividend, and I'm pretty sure I'm sure they're going to recover on the other side. And in the meantime, I'm getting a pretty good dividend on it, and I'm okay with that. I'm actually okay with that. Cowboy says, saw the AirPods thing, $25K, pricey. It's pricey unless you do have it and you're thinking of moving it in anyway. And then you see something like that, because if you're looking for a broker and you see that, and it's like, oh, well, yeah, I do need I need my AirPods. Why not? Let's move my 25K of investment into Wealthsimple. So, it's not really that pricey when you think of it from that perspective. Bismarcky says, Trump will tackle out. Yes. And that's another thing that's been bugging Trump this week. The taco memes. I don't know if you guys have seen them. Trump in a chicken suit, and Trump, I've seen some tacos with Trump's face. So taco means Trump always chickens out when it comes to the tariffs. And, it's kind of in reference to how he keeps backing down and giving all of these reprieves on tariffs. So let's hope Trump does the taco. Taco man, let's do it. Let's taco with these 50%. Because yeah, they're not good. They're not good. MC says, actually, the offer is from Air Canada. Oh, offering to buy your share at a minimum of $18.50 to a maximum of $21. Wealthsimple simply sent the paperwork. Oh. I'll tell you what that is. Air Canada, not this time around, but their previous quarter, they announced share buybacks. So they're buying back about 10% of their shares. That's what you're seeing. This is them offering to buy back some of the shares. So if you sell those shares are actually going to go right off the market. It's going to basically the number of outstanding shares overall when they're finished doing this, and they said it would take about a year, is going to be 10% less. And that's good. That's basically them undoing some of the dilution that they did during the pandemic. So yeah, that's what that is. Now that you see, you gave me enough information, I could put that one together. I like it. Bismarcky says, does America have enough capacity without importing from other countries? That's a good question. Because I'll tell you right now, they import a lot of steel and a lot of aluminum from Canada. They may not have the capacity. They may not, and maybe we can still sell some steel and aluminum to them if that's the case. They're not going to like it, they're not going to like the taxes on it. But that's they got to take that up with Trump. They got to take that up with Trump for sure. Rory says, if it was up to Steve, we'd all be in straw and mud tents with an EV plugged on the side. Oh boy, yeah. The good old pioneer days. Well, kind of pioneers. Pioneers don't have EV vehicles, but why not? Jersky is in the house with a good afternoon. Cowboy says TF shows his profit on interest, so it's taxable. Yes, it is. So yeah, if you are holding TF, so Timber Creek Financial, you definitely want to be holding it in your in a registered account. Otherwise, all of those dividends, I think it's actually technically a distribution or interest. It is 100% taxable. Stan's in the house with a happy Sunday all. I'm gonna update this leaderboard. It's kind of funny. Oh boy. All right. Oh, we got a 4-way tie for first, all at 75 XP. We got Jonathan up there. We got Mark. We got MC and King of Day. King of Day. All of you guys up there at 75, and we got a bunch of people at 50. Oh, this is cool. All right. I'm getting so distracted by the leaderboard. But then again, I'm a sucker for charts. I love charts, and that's kind of like a chart. So anyway, let's move on. We got Farm Boy saying aluminum tariff is especially crazy. It takes a crazy amount of energy to produce, and the U.S. doesn't have anywhere close to the capacity to do it. It'll hurt their own manufacturers. Oh yeah, and that's the thing. So if they need the aluminum, they're going to have no choice. So if you think about it that way, if you're paying a 50% tariff on that aluminum, pretty much anything you make in the United States that you're going to then sell, you're going to have to pass some of that on. I mean, nobody's going to be able, there's no way you could stay in business and absorb that whole thing. You have to pass it on to the consumer. So yeah, this is going to hurt. This is going to hurt. And it's, everybody's kind of like, oh, the U.S. is doing okay. Their weather and everything. Well, they're not doing okay. These prices, once they really start hitting the American consumer, it's not going to be good. And I'll tell you, when the midterm elections come up, if Trump is still continuing this type of stuff, you're gonna see the House flip to Democrat, probably big time. Then we'll see Trump trying to get stuff done. Oh boy. Oh, it's going to be a mess. It is going to be a mess. No ands, ifs, or buts about it. It is going to be a mess. All right. Philly says, is now a good time to buy into United Health Corps? I am thinking about buying their CDRs. Oh, yeah. I mean, healthcare right now in the U.S., those stocks, a lot of stocks, everything from Pfizer to United Health, they're down. They're all down big time. They will be fine. Like, I know they're going to be fine on the other side of this. Now, mind you, it could take a while before we get some meaningful recovery in those stocks. So I think probably the best thing is if you wanted to gain exposure to that sector, just dollar cost average over the next few years or longer, maybe 3.5 years before we could potentially see recovery. It really depends on what happens with, if let's say if RFK Jr. were to step down, that would probably be good for those stocks. Although I don't see that happening anytime soon, but I hope I'm wrong. On that. So I would say dollar cost average, but also put your mind that it's a long-term play. You're not going to get your returns big, nowhere's close. They will come, but not right away. You're welcome. I like I said, you gave me enough info that I could piece it together. So I like that. Leandro, let's see. I saw the interview of Algoma Steel CEO the other day, and he said that the Canadian market is flooded with imported steel. So selling steel to the local market is hard right now. Yeah, absolutely. Um, and that's another issue right there. Like a lot, we're gonna have to stop. One, we're gonna have to stop importing steel. We're gonna have to stop buying foreign steel. We're gonna have to start using our own. Now, we have there is, and I don't know. I think it is on the agenda for tomorrow. So the prime minister is meeting with the premiers. They're having a big meeting on. Well, the main topic of the meeting, of course, is interprovincial trade barriers. But I have a feeling these new steel and aluminum tariffs. I have a feeling they're going to become front and center at this meeting. So I think tomorrow it'll be very interesting to see what comes out of that. But so far, one of the things I do like is that Carney's being very adamant that everything is done by Canada Day. So that's interesting. Let's see if he can pull it all off. He might still have some momentum, and being a non-politician, he probably has some momentum, thinking, let's just get things done. But when does he become a politician? Well, no, that's when he starts basically not getting anything done. That's kind of the way for politicians. That's coming. That is coming, probably. Cowboy says Trump's game is creating havoc on consumers. I hear they have shortages. Yes, I've heard that too. And I've also heard some people here talking about some of the shortages just around, just in the grocery stores here. So yeah, we're going to have a lot of supply chain issues. It's not going to be good. It's not going to be good. Mario says, I'm picking up more HHL with the big pharma dip. Not a bad idea. Not a bad idea. So that's that one. There's the health leaders one. Rory says, with free dental programs in Canada, I've noticed Sun Life Financial is involved in the insurance part of it. How does this affect their bottom line? It's obviously good for Sun Life Financial. It'll be interesting to see how. Now, the rollout, especially the recent rollout, now that they've hit a big chunk of the population, that's that could certainly be an impact. Now, mind you, people still have to, they still have to sign up and all of this, but it'll help them. I don't know if it's going to be like a to the moon type situation. I think that's kind of a let's wait and see. Bismarcky says free dental is good for hockey players. Oh, that's worth a sip. That one's worth a sip. That's a good one. Rory says they make more than 70,000 a year, Biz. Well, if they're good, they do. But if you look at the people who are like low-level hockey players, so playing in the farm teams, they may actually be at that point that that they're good. But I would also imagine that, and I think Cowboy here mentioned it. Does dental cover dentures for hockey players? I don't know about dentures, but I have a feeling that if you're a professional hockey player, right, maybe you're not making the big money yet, but I have a feeling they probably have some really good insurance policies and programs. So they probably already have independent stuff with the NHL. I would assume, like the Canadian teams. Obviously, the American teams probably as well. But I don't know. I'm just, like I said, that's an assumption. All right, guys, we got Mary in the house with a hello all. And of course, guys, Mary's here. She's watching over that like button. So if you haven't hit the like button, well, now's the time. Now's the time. Hit it, turn it blue. Let's push this out to a billion people. A billion people. I know we're going to get a billion people coming in, but let's push it out to a billion and see what happens. Rory says, if you don't hit the like button, Mary will ensure you need new dentures. All right. I can't picture Mary showing up at your house and saying, you got the dental insurance? Good. You're going to need it. I don't see it happening. I don't see it happening, but you could get a glare. You could get a virtual glare from her. Ace says, does buying covered calls like HMAX make sense since they charge fees? Are the returns better than index after you account the fees? Um, it's a here's a kind of a thing. So when you look at the market, if we're on a strong bear market, or sorry, bull market. So if we got a good healthy growth going on in the market, then covered calls are not going to beat. Like if you have a regular ETF, it will beat the covered call ETF when you look at it from a total return. But now let's just go backwards. When you have a market that's kind of flat, or it's kind of in a kind of volatile. In those cases, a lot of times the cover calls could actually pull it ahead because think of it this way: if the stock isn't really gaining anything, like if that basket of stocks is pretty much stagnant, not really gaining or losing, you add in those covered calls and the premiums that they're receiving, that they're giving to you. Yeah, you're going to be a little bit better off in those situations. So it really is situational. But when you do have a strong, so if you have I wouldn't even say strong. If you have a steady movement of the market going up, your best bet is the non-covered call version because you'll make the most money. Now, with that being said, if you're an income investor and that's your goal, so for example, if you're in retirement and you're using these covered call ETFs to make money, well, that's a different story. That's a different story. In a case like that, you may not really be concerned about the total return. You're concerned more about the income. And we will get that one person that will come in and say, well, Candace, you're absolutely wrong. Because if you just go with the total return, they can just sell some of that and use that money. And that's entirely 100% true, provided you got a market going up. If you got a market that's not going up and they start selling it, then they really start to cut into their whole portfolio. They start to actually lose, they're going backwards at that point. Whereas when a market is going sideways or going slightly down and you got that covered calls, and you got that income coming in, and you can take that income, and when the market does rebound on the other side, you'll regain a lot of that growth. So it really comes down to your situation. But if you've got a really long runway ahead of you, you're almost always better off to just go with the non-covered call version. Just go with something that's going to give you a really big total return. Simple as that. That's just the way things are. But at the same time, people love dividends. No ands, ifs, or buts about it. Now, you can find some total return stocks that have half decent dividends, but at the same time, there are some people who are like, I just want to have a couple of good covered call funds because, I like to have, those dividends coming in. It makes my day great when I get that email in the morning saying, your HHIS dividend has come in or your bank dividends come in. And those, as long as if you're at that point there and you're reinvesting them, yeah, it's not a bad thing. So covered calls are fine. Covered calls are fine. But when you do the math, like I said, it's very situational in that case. And some people, myself included, I will sometimes move between them depending on what the market is doing and what the overall trend is. All right. Anyway, that was a good question. I like the question. Mario says, I pressed the like button. Jonathan wants to know if there are tariffs on dentures. Done for Maddie. Who's Maddie? Oh, Marie. You mean, yeah, okay. Stephen says, Taco Talk is making Trump more bold and leaving him no room to save face or rethink the harm that his tariffs cause, which is not helpful. Yeah, no, that's 100% true. That he's the type of person that he can get a little bit on. I'll say it. He can get a little vengeful, and if you annoy him enough, he can do things in spite. So because he's He's kind of a very emotional reactor that way. Let's see. Rory says, is DCA still a smart game plan in an extended downturn, or should we rely on cash buildups? I mean, DCA to me is always pretty reliable. I mean, if you're heading down here, and here's that thing, right? If you're doing a cash buildup and you're waiting for the bottom, you're not going to know that the bottom is here. And the problem is that while you're waiting for the bottom, you may have already hit the bottom and you could be on your way back up. And by the time you finally realize, you know what? We hit the bottom 6 months ago. You may not be able to get in. You may not get any good deals at that point. So with dollar cost averaging, you're going to be hitting everywhere, and you're going to get a fair price right across the board. So yeah, it's still a smart game plan. I look at it this way, like, with currently, the 0 to 100K challenge, I am still, I'm building a cash position in there, and that cash position's getting bigger. Once we've moved into bear territory, now I'm waiting for bear territory. That's what that position is for. So for me, whatever the high is, and I have to recalculate it because we have a new high compared to the last time I calculated it, I need to see the price 20% below that high. And once it does that, then it's like, okay, we are in bear territory. I'm going to switch gears and I'm going to start dollar cost averaging as we move through that bear market. It's going to happen. And it could very well happen this year, especially if the tariff thing continues to get out of control. That's going to push us there faster. Right now, we're not there. So for June, I will be adding more to that cash position, and probably July and probably August. It's just now I think in the fall there's a good chance we could get there, and then I'll switch gears. And don't worry, guys. I will probably do a video on that built into the 0 to 100K challenge. So we do actually have another 0 to 100K challenge video that'll be dropping on Friday. If you're a channel member, it'll be Thursday. So let's see. Mario says, I'm a big fan of covered calls. Yeah, I like covered calls. I absolutely do. Let's see. Besides Timber Creek Financial, what monthly dividends are your favorites? Canoe. I still love my Canoe EIT. So that there is a, it's not a huge dividend, but it's a pretty good one. I like bank. I think bank is another good one. The banking sector is pretty resilient, and Evolve does a pretty good job of producing some pretty good returns on it. So I do like that as well. I really like the idea of HHIS. I know it's gone down since it's come out big time. But when tech starts to explode, eventually, maybe not right away, that it could be a very interesting one to watch. It could be a very interesting one. So yeah, those are just a few that pop into my head right away. Max says, are covered calls a higher risk tolerance? Yes, they are. It depends. Now, mind you, it really depends on, like, when you're looking at a covered call, depending on the management team on that. So some management teams are really, really good. Some of them are not as good. So when I look at a covered call, one of the things that I want to see is I really want to see, a total return of at least 0. Sorry, not a total return. Let me just, I want to see a total return a little bit higher, but I want to see a return before, like I don't want to say total return. I want to see a share return or an ETF return of around 0. That's, to me, is perfect. I don't like to see it go backwards. It will go backwards from time to time, but I like to see over the long term, I like to see it hold a little bit of its value. Now, with that being said, a lot of them don't. A lot of them have everything in it from return of capital. You could also get, in some cases, you can also get capital gains and a whole bunch of different things. Like there's quite a big cash profile when it comes to, tax profile when it comes to them. So I kind of look at it like, as long as I'm moving forward, because that's kind of where I am. I'm a total return investor, so I need to see those I need to see those covered calls that are going to give me total returns that I can find respectable. Now, with that being said, when I get to a point that I switch gears, so let's say when I retire and I move into full income investing, that's going to have a lot less of a importance to me. My importance will be at that point will be like, okay, I don't mind it going down as long as that dividend remains stable. So if their share price goes down, but they're making a whole bunch, and and that's what happens. Like when you have a market going down, a lot of times, a lot of these covered calls are really good at making those premiums, and so that can preserve and protect that dividend for the most part. Now, if you look at, for example, HYLD, their dividend did go down a tiny bit, but it came right back up. It's actually now higher than it was when they made that fund. So I'm happy with that. I'm happy with that for sure. But are they higher risk tolerance? Well, yes. If you add leverage, it's even more risk. So it's a little bit different, because also keep in mind too, you are paying as well. You're paying a little bit higher management fee than you would be without without, like, if you're looking for an ETF. So let's say if you're looking for growth, you're looking straight up total return, so dividend growth in an ETF. Your best bet is to find something that's known as a passive ETF. So a passive means that it basically just tracks an index. So maybe it's the S&P 500. It'll track the S&P 500, and they might rebalance it, quarterly, or maybe semi-annually, depending on, but in other words, that management company doesn't have to do much with it. They pretty much can set and forget it for the most part. And that's fantastic, because that also means very, very low fees. So if you look at something, for example, like VFV, that's why they have really low fees. It's a passive fund. So yeah, those are just a few things I put in mind when it comes to risk tolerances. Obviously, and it's kind of one of these things, like they will call it medium to high risk when it comes to these, but I honestly think that they are, I don't see them as being that risky compared to, but I think they're just doing that because there is so much going on with them, and there is a lot of extra complexity to it. So, and that's why it's there. But depending on your risk tolerance, and my risk tolerance, I have a conservative risk tolerance, but covered calls, most of them are fine for it, and even the leverage is long. But once again, situational. Everything is situational for me. Mark says HMAX versus bank for income investing and low NAV. As I mentioned before, obviously I do like bank. I like bank, but HMAX is not bad. HMAX is not bad. But one of the things I do like about bank is they've got, like, if you go and you look at it, they've managed to hold that value. So it's one of those. Remember when I said I like to have a return before I put in the dividends that's above zero? Bank has been doing that, and I like that with them. But I like them both, to be honest, Mark. But bank, I think, has just been one of these ones. And one of the things I like about bank as well is that you've also got the life co's in there as well. So that to me is pretty good, because it's giving me exposure to the broader sector, not just the banks per se. All right. Ian says, I like dividends because it helps me DCA. Yeah, no, absolutely. 100%. And also, I've talked before in the past about passive rebalancing. So passive rebalancing is like, I normally will do a quarterly rebalance on my portfolio. Now, all of the dividends that come in between, those rebalances, I use them for passive rebalancing. So for example, well, let's take a look at when Canoe was exploding earlier in the year. Obviously, those dividends not going back into Canoe, because Canoe was slowly getting bigger, as in their share in the portfolio. They were going into other companies, maybe some struggling companies that I still had faith in. So I would do it that way to sort of slowly move some of my diversification closer to my goals. Obviously, there's not enough there to get them all the way, but it's not a bad thing. So that when I do get to my diversification, some things are already a little bit better, and I'm not put into a situation where I'm like, okay, well, I do need to sell a couple of shares. Like, you know, if I was pouring all of the canoe back into canoe, it could get into a situation where maybe I'm like, for diversification's sake, I have to sell a few canoe because of that. So yeah, it prevents that from happening, and I like it that way. All right, Michael says, hello, Candace. I sold my small position of McCoy on Thursday, but did not get the 407 high. Oh, you gotta hate it when that happens. Yeah, one of the things I will do is if I'm thinking about selling something, I'll put in a limit order. I'll put in a limit order because, I'll know what I want or what I'm willing to sell for. And that way if I do miss, and it doesn't sell, then fine. I'll wait till the next time. Now, Friday, was it Thursday? It was Thursday. Thursday, I sold my Air Canada position. So as you guys know, I had that swing trade going on, but Air Canada had other good earnings and kept climbing with some of the heat and the tariff war coming down. Now, of course, that's all changed now with Friday, but I was looking; they were almost $20. Almost, they weren't there yet, but I was like, you know what? This is not going to hit my target of 21 this time. It's going to go back down, and it's probably going to drop below 17 for a bit. So I was just like, let's take these profits. I think on Friday I said it was 500 that I made on it. It was actually 400. It was 400. I was looking at it. A little bit after that, and I was like, oh no, it was 400. But yeah, $400. That's still almost a month of the fund that goes into that challenge. So I'm like, you know what? Even if, let's say I'm wrong, and all of a sudden it surged up to 21 on Monday or Tuesday, I'm still okay. I took $400 in profits back into the challenge. Now, mind you, I have not spent that money from that sale. It's just sitting there in that portfolio. So that'll be extra money to, if we get a red month in June, there'll be some great places probably to spend that. So I looking forward to it. And I will get back into an Air Canada trade again. Now, mind you, I gotta wait 30 days because of that TFSA thing. So in July, if they go back down, I'm there. All right. Ian says, I recently started buying bank in my non-registered. Don't know how that will affect me tax-wise. Any thoughts? Well, there's some good news about that. You don't have any foreign income, so that's good. Basically, you're gonna have some Canadian eligible dividends in there. You're probably gonna have some return of capital in there, but it's hard to say. I think the last time, they didn't even have any return of capital. I think they had some capital gains and some Canadian eligible. So yeah, it's not that complicated. Like if you're gonna put a high dividend ETF in a non-registered account, bank is not a bad choice. Definitely not a bad choice. Mario says, I will pick up HHIS when Trump affects the markets. Yeah, absolutely. And with him and some of that chip stuff that's going on, you could definitely see some more retracement on HHIS. So you might get some opportunities, some buy the dip chances for sure. Leandro says, I'm waiting for 2 consecutive rate cuts in the U.S. To my mind, that is when the bull market will start. Yeah, right now, though, the problem is as long as the data stands firm in the U.S., we're not going to see any rate cuts. They're going to hold steady. Despite the fact that Trump is like, he wants those cuts. Like he is absolutely wanting the cuts. It's just not going to happen. All right. Rory says, my holdings in my TFSA are primarily blue chip dividend payers. Okay. Fair enough. Fair enough. Let's see. I see the Bank of Canada cutting on Wednesday, so GICs, etc., will not be as lucrative. Lucky to get 3% on the NR term deposits. Well, I hope you're right, Rory, but right now analysts are predicting 82% chance that they hold the rate where it's at. So it could be a long shot to get a cut, but I'd be happy with it. Sure, why not? Ian says, I was having trouble canceling my Spotify premium subscription. Sent an email saying I was struggling. They cancel it for me. Spotify is notorious for being hard to cancel. Oh boy. Yeah. Most companies, they will go out of their way to make cancellation really, really difficult. Yeah, gyms are that way too. But I know a lot of companies, like, they won't even let you cancel online. It's like, nope, you have to call us to cancel. And then they go through retention scripts and they will throw everything but the kitchen sink at you. And sometimes even the kitchen sink to try to stop you from canceling. So, oh boy. Yep. Yep, absolutely. And Ian's saying, yeah, struggling to cancel, not struggling financially. Well, it doesn't matter. They don't need to know that. And honestly, too, a lot of the things that we pay for, if you were to sit down and look at everything that you pay a subscription for, even if you need it all, but if you were to just start calling them one after another and sort of say, I'm thinking about canceling, you might be able to, through their retention scripts and stuff, you might be able to get some deals. So you might actually be able to knock down what you're paying for a lot of stuff if you were inclined to do that. And if any of you do decide to do that, bring the information back. I would love to hear how it goes. Absolutely. That would be so good. Let's see. Between HDIV and HYLD, HDIV share price is solid. I love it and keep adding to it. Yeah, no, I like HDIV. So HDIV as well. And of course, HDIV has the less complicated taxes too. Just putting that out there. So I do like it. Vineet is in the house. Hello, Vineet. Good to see you. Jim says VDY is the passive ETF I picked, and I picked HMAX for covered calls. Okay, very cool. VDY is another one that I do. I do love the VDY for sure. A says KMP jumped like 15% in the last week. Oh boy, yeah, that's not bad. May, despite everything that's been going on, there have been some huge spikes in growth there. Yeah, I've liked May. I've liked May for looking at the challenge. I'm like, oh boy. I definitely was very, very good month for the challenge. Cowboy says, we'll be changing my TF for WCP. It qualifies for tax exemption. Okay, fair enough. Ian says, I very rarely buy stocks in the same company I got the dividends from, but I hold SPYI in my RRSP and I reinvest those dividends back into SPYI. Okay. Yeah. And that's the thing. And like I said, it's situational. It's fine. In some cases, like if I get dividends from a company that's underperforming that I have a lot of faith in, those dividends will probably go back into that company. Not to say that SPYI is underperforming, but let's see. Good time to buy WCP, in my opinion. I've been adding to my position. Yeah, absolutely. No, I do like WCP. Jersky says, I like cover call ETFs. They help me keep investing because I like the monthly dividends, but I also hold some single stocks as well. Yeah, absolutely. And keep in mind, overall ETFs. So ETF investing in Canada, before used to be a smaller segment of investors, but that has been growing. It has been getting, and they've just been getting more and more popular. Bismarcky says, are you going to buy Air Canada again if it gets down to $17? Yes. Well, unless it happens before July. But yeah, going forward from July, yes, because of the 30 days. Rory says, I might add into WCP at around $7.50 per share. Not too shabby. Ian says, sold some BNS to buy bank. Don't see the point in holding BNS instead of bank. Don't like holding individual stocks that much anymore. Okay, fair enough. Fair enough. Interesting enough. Now you'll see this in the bank report, but Scotiabank actually raised their dividend. So there is that. They had, and recently, not that long ago, Scotiabank said, we're just not going to be, don't even think about looking at our dividend going up. It's not going up. We're concentrating on other stuff. But apparently they changed their mind. Get Rich says, building cash for market timing. Personally, I keep investing in index covered call ETF, showing red in my portfolio. That way, I'm always in the market, reducing average price and increasing my monthly payments. Yeah, absolutely. I mean, dollar cost averaging is the way to go when you're looking at it long term. Now, when it comes to building a cash position, unless you know what you're doing, there's so many areas where things can go wrong. For one, if you're building up a cash position waiting for a bad market, what happens when you get into that bad market is one of those things. And you also have to keep in mind too, like, actually here, let me, I just realized I did not share my screen yet. Give me a second. I'm going to pull it up here. As soon as it lets me here. All right. I want, let's see here. Yeah, I want to share my screen. Here we go. Window and I think this is the one here. TMX. Yeah, this is the one. All right. Oh, yeah, I was going to show you something. We'll use I'm going to use VFV because simply VFV follows the Vanguard. Sorry, the Vanguard. The Vanguard fund follows the S&P 500. So you get a pretty good idea of the market. I'm just going to come here to, we'll grab 15 years. So as you can see, I mean, the market does tend to go up, but you do have these moments like this here. That was COVID. You can sort of see it's very distinct. Oh, it's not showing it, is it? Hold on. There we go. Here we go. All right. Here we go. Vanguard, as you can see, this here is that little spike there. That's COVID. And here, right down here, this is that last little bear market right in here. So when you're looking at this, sometimes it's actually really interesting. If you actually look at that bear market, then you look at this one little thing. This was what Trump did. That's pretty darn close. Like the S&P 500 came very close to being into a bear market with that whole, what was it, Independence Day or whatever? Not Independence Day, but I'll just call it Trump's tariff day. So that was kind of interesting. But yeah, if you look at it, like, if you're in this area here and you were saving up, the only place that you're going to make profits in here is right down at the bottom per se. But, as you're getting closer, and this is kind of the way I do it with my, and let's just pull up the board here for a moment. I like the whiteboard. I'm just going to draw this up. All right. And we'll go down like here. All right. So this is your overall. So this is your bear market right in here. Now, the way I do it is I will, as I'm in this market, I'm going to slowly build to my cash position. I'll just put a C here. So I'm going to slowly build to my cash position, basically a dollar cost caching. We'll call it dollar cost caching, except for I'm just going to put maybe one, I may buy one cash in here, maybe one in here, maybe one in here. As the market as we keep going through the bull market and things start getting, you start to get the feeling that things are starting to get overvalued. You can kind of get a feeling that, yeah, there's going to be a bear market coming soon. Now, we can all be wrong, but, I'm pretty good at trusting that. So I'll get to a point where all of a sudden I'll start putting 2, maybe 3, and maybe 4, but it'll start to increase. And maybe up here, I'm at that point where I'm putting, let's say I'm just putting 10 all of a sudden, because I'm getting that feeling that we're getting close. So what happens is then once I get here, and the market changes, well, I'm probably still adding here. Like I might have added 12 here because I don't know that this is happening. But when I look here and I get to this point, let's just say this point's about here, and let's say that's our 20% down. Well, then I switch this around, and instead of cashing, I'll start buying. And I'll do it the same kind of idea. I'll just, I might buy one, and then as this gets longer and we're still going down, maybe two, maybe three as we get down. And, I'm probably still buying here. Once we get to this point, though, that we're 20% up from here, so maybe that 20% is right here, then I switch directions again, and I'll slowly start coming here. Now, mind you, I'll start very slow. I'll start one. I might even start with 0 initially, but I'll stop the spending at that point, and I'll start looking towards a buying strategy as we move into the next bull market. So I kind of look at it that way, just sort of the way I pull things together. But the way I do it, because of the discipline, I'll make more money over here. But if I was aggressively putting away cash down at the beginnings before we were even getting close to a bull market, a bear market, then you're in that situation where, look, everything I buy, like right here, if you look right here, let's just draw this line across. So this here, that's a loss. I've lost a little bit. I've lost a little on these. Like these ones here, absolutely. If I just dollar cost average into anything, I would be better off at this point. But all of these ones, these are the ones that I'm getting deals on. So these ones are being turned into deals, as we move in. So it just gives you a general idea of how that is working. It's very similar to what Warren Buffett does, where he slowly starts taking profits off the table. And that's the thing too. Like, I'm not looking to create a situation where I'm putting everything into cash and I'm just holding and I'm selling everything. No, I'm just taking some profits here and there. I'm taking some profits that's going in, and I'm kind of taking it casual. But for the most part, like right now, when I look at it right now, where I think we're up towards the top, when I look at how the money overall coming in at this stage right now, I'm probably, I would say right now, I'm probably at about 5% going into cash. 95% is still DCAing into normal stuff. If this prolongs, if this goes through the summer and we don't yet start falling, I'll probably get to a point where I'm at about a 1090. And that's just the way these numbers will go. I'll never get to a point, like no matter how long this goes on, I'm never going to get to a point where I'm going to have like a 0-100. It's just not going to happen. Not going to happen at all. All right. More. I love my tangents. Cowboy, been buying WCP with my div cash. I think it's going to be a good return in the future. Nice. I canceled the card. It was easier than dealing with those companies. I've been there before. I actually had I think it was, TransUnion. I signed up once to get my credit report. I wanted to see it. Now I had to sign up to get it. Because I wasn't going to mail them and hope that they maybe someday send me one. I wanted to see what was going on in my report. I got the report. I'm like, okay, great. So then I go to cancel. Can't cancel. I was like, what? There's no way to cancel online. And I get to the point that I even called, I called once, and the wait time was just crazy. And I was just like, this is crazy. I'm not going to deal with it. So at that time, I had it hooked up to, I think it was my Scotiabank debit Visa card. So I just called Scotiabank and said, I lost my debit Visa. Can you cancel it and send me a new one? And they did. They sent me a new one. That's how I got out of that. I was just like, seriously. Um, and it's like, it's going back to that whole making cancellations so friggin' hard. Let's see. Ian says, I got to cancel Netflix next. Did you even know I had it until I saw the money coming out of my PayPal? Oh gosh, yeah. That's the thing. I guess they call them vampire charges. So a lot of times you might have signed up for something and you're just no longer using it and you totally forgot that it's still there. So go over your statements. You might find that you're paying a monthly fee to, some streaming service that you're not even watching. So yeah. And another thing too, if you want to save money, if there's a streaming service that you kind of like, you want to keep it, but you don't really watch it that much, a lot of them now have ad versions. So you get a reduced monthly fee, but you may have to watch 2 or 3 commercials before your show starts. So that's not a bad thing. Michael says, hello again, Candace. Are you aware internet bounced last week on a takeover offer? I have a small position. Enter rent. No, I was not aware of that. Interesting. Ian says, I still own 375 shares of BNS. Might sell if it goes back to near all-time highs. Okay. Yes, liquidation day. It was one of those things where it's like your mind just goes blank. It's like, what the heck was the name of that thing? Yes, good old liquidation day. Ooh, we might be able to get to the next news story. I think I'm caught up. Let's see, Candace, is there room on that back wall for electronic scrolling ticker symbols right next to the left? Oh, that would be kind of cool. There's room, but yeah, I think I need a bigger budget. I think I need a bigger budget for that. Oh boy. All right. Well, it is time for, believe it or not, 1 hour, 7 minutes in, we're getting to our second story. So this is all about debt. Oh boy. So debt delinquency rates are rising. Canadians are, they're struggling to pay off pretty much everything from credit cards to mortgages with, with some severe delinquency rates. So they're now hitting levels that have not been seen since, the financial crisis. So 2008, we got a lot. So in the first quarter of this year, basically a little bit more than 1.4 million Canadians missed a credit payment. So that's 1 in 22 people. Now, the portion, this is kind of interesting. So Canada's severe delinquency rate, that's the portion of debt where payments are more than 90 days late. That climbed to its highest rate since 2010 for non-mortgage debt. And oh boy, speaking of mortgages, speaking of those mortgages, I got some data. This is from Ontario. So mortgage delinquencies in Ontario have risen 71.5%. And we're talking year over year. So in the last year, we're up 71.5%. That's a lot. That is a lot. Also, the number of Ontarians who missed a mortgage payment in the first quarter, it was the highest ever recorded. So we're breaking records that we probably don't want to be breaking. Canada overall topped the G7 in household debt in 2023. That's pretty much the latest data we have on that. And total borrowing levels. So our total borrowing levels back in 2023, it actually surpassed our GDP. So that's there's a lot of debt. It's a little bit of a house of cards. Now that amount of debt, totally not ideal, pretty dangerous. But if you're in a situation where you got low interest rates and not just the low interest rates, you also have to have strong job markets. It can be manageable, but oh boy, as soon as you move away from that, it's problematic at best. And that's kind of where we're at right now. Holy banana bread. The debt is just absolutely crazy. Absolutely crazy. All right. Let me see something here. Jonathan says, I was just kidding. It was Liberation Day, not Liquidation Day. Oh, Liberation Day. There we go. Oh my God. Yes, 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 yes. I saw the L and I was just like, yeah, that's it. All right, liberation. Yeah, he's liberating people from their, he's liberating people's money from their wallets. That's basically what that is all boiling down to. Oh dear. It's it's a little crazy. It is absolutely a little crazy. All right. Well, you guys are slowing down the chat, so I'm going to drop into the next story. So, oh boy. So oil, the price of oil, it's forecast to go down. We are looking at some interesting stuff on the horizon. So basically, in a nutshell, analysts have cut oil prices. They forecast this is the third month in a row they've cut their overall forecast. And this time around, it's basically because of rising OPEC supply. And add to that some of the ongoing trade uncertainties, and it's not good. So Brent crude that is now forecast to average basically around 66.98 in 2025. That's down from 68.98, which is where it was at last month. Now, U.S. crude is projected to come in around 63.35, lower than April's 65.08. So we're looking to see a couple bucks, basically a couple bucks come off of the price of a barrel. So far in 2025, prices have averaged around basically 71.08 for Brent and 67.56 for U.S. crude or WTI. What the heck is going on? This is all about supply side dynamics. So OPEC members, they've started increasing output. There was an unexpected hike of 411,000 barrels per day for May and June. So that's not good for the price of oil. It's not good. And in fact, they're actually anticipating another output increase may be announced for July. And and it's like, what is OPEC doing? I don't know. They're definitely not going to be good for the price of oil. Now, mind you, it might be good for inflation, because the oil component will definitely be looking to come down. But nonetheless, demand. Well, there's a few headwinds when it comes to actual overall demand. So global oil demand in 2025, it is expected to rise. So that's good. This is kind of offsetting some of the damage from the increased output. U.S. right now and China are seeing weaker demand. So even though the world is expected to need more oil, U.S. and China are looking to see their amount cut down a little bit. A lot of this has to do with fuel efficiency improvements. Also, that economic uncertainty coming into play, shift towards electric vehicles. Although in the United States, that shift towards electric vehicles might be turning around, because it's interesting. It's interesting. I think with Trump and Trump's whole push towards non-electric and basically gas again, that could be very interesting. So we're going to have to see how this all sort of pulls together. We also, of course, have geopolitical and trade risks in there as well. So different trade disputes, that's going to continue to cloud global demand for sure. No ways around it. And Russia's war on Ukraine still presents a pretty big geopolitical risk. That's a mess. That's a mess. I don't think I'm beginning to think that there's not even a chance of peace this year. I think Trump is going to have to sort of pull back on that one, because I don't think it's going to happen. But, I guess the key takeaway from all of this, supply is rising, demand remains shaky. It's not a good market to hope that you're going to make a lot on oil. Now, if you are, of course, playing those inverse ETFs, so HOD, I know Rory likes to play that one. there's a bit of there may be some opportunity in there. There may be some opportunity in there for you. But nonetheless, if you're like me and you love oil, well, there's going to be good stacking opportunity. Dollar cost average across oil, your oil companies. I think that's going to actually be that's going to be fine. I think that will be fine on the long term. I think you will make some money for sure. So you just got to be patient. You got to be patient. I have a feeling a lot of things in the market you may have to be patient for the next 3.5 years, but let's see. Let's see how it goes. And of course, we'll change your mind as things change for sure. Jim says, but the banks got record amounts of cash saved up for people that can't pay their loans. They do. The banks, most of them added to their loan loss provisionings this month because they've got a lot of issues. For one, you've got that mortgage renewal wave. It's here. It's no longer on the horizon. It's happening. It's happening. So, there's got to be loan losses in that as well. Some of the banks who, especially ones who have taken other banks under, added to other banks, may have some other unexpected costs in there as well. So, for example, they might have impaired loans that they've picked up. An impaired loan, basically, that's a loan that you're not going to get all of it back. In other words, it's high risk, and people are probably the people who have those loans are probably just they can't afford them. They're probably going to default on them. So those are bad loans. Those are the bad ones, but those are on the rise for sure. The Blessed Beacon. Oh, I like that name. Let's see. What are your thoughts on growth versus income investing strategy? Well, we kind of covered this already, but in a nutshell, it really depends on your runway, for one. If you are young, if you've just started investing, you're in your 20s, your 30s, maybe even your 40s, you've got a lot of room in front of you. If you're looking to maximize what you're going to make, your total return stocks, so dividend growth stocks are going to be the ones. So growth and dividend growth. Like a lot, there are some that are pure dividend. Hey, fantastic. But those are the stocks that are going to give you the bigger returns. Those are those stocks that, you're going to see things like over 3 years. You might see like a 200% growth on them. You're going to pull in the really big numbers that way. Okay. With that being said, income investing, that to me is most efficient when when you're getting into retirement and you want that income, you want that tax-free income. So imagine if you had been investing since the TFSA came out with your total return stocks. So in that amount of time, you're probably looking at the amount of contribution room you were probably given was like, 108,000, somewhere in that vicinity. If you have been growing, let's just say, even if you've been having a modest growth of like 25% per year, you could have that quite a ways up. I mean, you could easily have that up. Even 200,000 wouldn't be that unreasonable. A lot higher depending on the trades and on the stocks that you picked. Now, at that point, if you were retiring now, let's say you were, getting ready to retire and you're thinking, well, okay, I want a nice big tax-free income. Well, that's where the income investing strategy comes in. And that's where you can create in that TFSA, you can create a massive amount of income. You can make, using the right covered calls, stocks, income stocks, you can get a really good, and that's all cash flow coming out. That's all tax-free. So you're not paying any taxes. It's not affecting, like if you're getting something like let's say OAS and maybe GIS, if you, don't have any real income at that point, it's just all your investment money coming out. That's kind of cool. So you could create this situation where you're making quite a bit of money in retirement. That's kind of one of those goals. Now, keep in mind, one of the things people sometimes forget is that when you're taking an income out of your TFSA, so let's say, just to make it easy, let's say you were making $1,000 a month out of your TFSA, and I'm using $1,000 because Like I said, we're making the math easy. Well, that means each year you're taking $12,000 out of your TFSA. Well, every January when you get your new contribution room, you're going to get your, let's say you get let's say they give you 7,000. Well, you're getting that 7,000 back, but guess what? That 12,000 in income you took, you're getting that 12,000 back too. So you're not getting 7,000, you're getting 19,000. So that's pretty cool. And if you've got money else, let's say you've got money in a non-registered, or you've got money in your RRSP that you want to take out, you can move that into that TFSA to basically mean that maybe next year, because you put all of that in, maybe instead of that 1,000, you're making 1,100. So just, to me, it's very situational. Now, there are some people who, they want that income when they are younger, and there's nothing wrong with that. But you have to sort of be, that would have to be your strategy. Now, if that's your situation, you have to sort of look at what are you doing with that income. So a lot of times, if you're growing it that way, you are missing opportunity. You're missing that long-term opportunity to have a lot more money from that dividend growth. So, but in some situations, there are some people that just are like, you know what, I just want the income. And if that's the case, as long as you're okay with that missed opportunity, then there's nothing wrong with that. There's nothing wrong with that. And I know, like, there's some people out there, like, I think there's a few people out there that are very, very much into the full income growth, right from day one. And there's nothing wrong with it. Dividends are fun. I just say that if you're doing that and you've also got a job and you're not, you don't need those dividends, then if you're reinvesting it, at least that helps a little bit. But overall, yes, you will make more money with your total return stocks. You definitely will on that long term. All right. A says, what loan provisions will the bank stocks not fall if we enter with loan provisions, will the bank stocks not fall if we enter the bear market? It's going to help them. It's going to help them big time, because you got to look at this. That money has already been, it's almost like that money's already gone, because it has been subtracted from their earnings. So when you're looking at the earnings right now in the banks, that money's coming out of it. So it has already been accounted for, those losses. So yeah, it is a buffer. It's a good buffer. Where you run into an issue is if it turns out to be worse than the banks anticipate, then there's going to be an impact. Now, so far, that's not been the case. The banks have been dead on. They've been very good. Their forecasts have been right. And in a couple of cases, a few of them have actually over provisioned so far. So that's a good thing. So yeah, that will certainly help create a lot more resilience in the banks. Now, mind you, the banks, when they first started setting up this loan loss provisioning, they weren't anticipating the side effects of the tariffs, because those tariffs are going to impact things as well. And speaking of tariffs, let me just bring up I'll bring up the graphic for the next story, because we'll slide into that story as we do this. But those tariffs, they will impact the banks, because when you start looking at companies have, of course, business loans with banks. And when companies can't pay those loans and have to default on them because of economic pressure, economic upheaval caused by tariffs, then they're going to have some issues. But anyway, very quickly, I just got a couple little things on the war. We already talked about the aluminum tariffs and the steel tariffs, so we're not going to talk about that again, unless you guys bring it up in chat. We'll leave those be. But as I did mention before, we have the U.S. court. So a lower U.S. court, they struck down all of the global reciprocal tariffs, as well as the fentanyl related levies on Canada, Mexico, and China. And that was fantastic. The market loved it. The market had a good day on Wednesday as a result. But not even 24 hours later, the federal appeals court then agreed to temporarily block that lower court's decision. So we didn't even get a day without tariffs, just the news, because when they blocked the tariffs, he was given so many days. I think it was 90 days? Something like 90 days to comply. So obviously he didn't comply, got his appeal, and yeah, those tariffs are back in place. It is expected that if it goes, if any other courts decide to challenge it, it could eventually make its way up to the federal, to the Supreme Court. If it does, well, guess who stacked that court? I'll tell you, that court tends to fall in line with Trump. So that is definitely something to think about. One other thing I just wanted to mention, and I kind of already did. So as I mentioned, Carney is meeting with the premiers. He has promised to present them with some new legislation aimed at reducing approval times for major infrastructure projects deemed to be in Canada's national interest. So what does that mean? In clarification, he basically said ports, clean energy grids, trade corridors, nuclear facilities, critical mineral mines, carbon capture facilities, and I like this one, pipelines. And I think he threw a caveat there, if they make sense. So in other words, a west-east pipeline makes sense. But if it's a pipeline to somewhere's outside of that, it may not make sense. It's hard to say. We'll have to see. He is hoping that this legislation, that he can get it into the House and passed by Canada Day, which seems to be that big thing where he's promised everything by Canada Day. So we'll have to see. We'll have to see if he can pull this off. I'm hopeful. As I mentioned before, we just really need to see him get somewhere. And there's also been some, oh boy, there's been some rattling as well within the Conservative Party that some folks in the party are wanting a leadership review by March, but we'll have to see if that happens. I think Poilievre still has a good amount of popularity within the party, so we'll see how that goes. Let's see. We just did that one. All right. Cowboy says in 2015, a barrel of KFC was more than a barrel of WTI. Good old Kentucky Fried Chicken. Or is it still Kentucky Fried Chicken? Somebody once told me that they changed their name to Kitchen Fresh Chicken. I don't know. They'll always be Kentucky Fried Chicken to me. And I remember the old jingle, about finger licking good and all of that. But I'm not going to sing the jingle. I've got a lot of jingles from my childhood that are stuck in my head. Great example. Tangent again. Growing up in Halifax, there's a cab company out there called Casino Taxi. And they had a jingle when I was a kid, and I swear I remember it. It's like, Casino Taxi, we're the fast ones. Casino Taxi is near as your phone. No need to dial, don't get wet. Dial our number, 429-6666 or 425-6666. Anyway, I'm sure if you go on YouTube, you can probably find the commercial, but it's stuck in my head. Now I'm probably going to think of that commercial. I'm going to think of that jingle probably 2 or 3 times before I go to bed today. I can guarantee it. Rory says they are not switching from winter to summer gas at the moment, or do they do that in April? Not sure. Yeah, I don't know. I don't know the exact time they do that, but I do not know. I don't have an answer. Let's see. There's enough grease in the chicken, Cowboy. There probably is. I saw the night bot. So that made me think I'm going to check the leaderboard again, see where things are going. Jonathan's still up at the top, 175 experience points. So those of you who got in here late, you'll notice there's a new feature. Every so often somebody has a little crown with a number next to it. Well, that's the leaderboard. If you look up at the top of the chat comments, you'll see a little crown up there. and it might tell you how many experience points you have. If you click on that, you'll see the leaders, and this will show us who is leading. So right now, Jonathan is in first with 175 experience points. Rory in second with 150, and Cowboy bringing up the third place. So the bronze medal, the Cowboy. No, this is kind of cool. I'm enjoying this. So how do you get experience points? Easy. Yeah, every time you make a post, you get some points. Apparently as well, and this is the reason why this made me think, if you drop a super or a gifted membership or something, you get even more points. So, if being first is important to you, there's a way to get there. All right. Cowboy says, I have 9 oil-related stocks. We'll add more. I don't believe electric will ever take the lead in transportation. Yeah, I mean, oil, I think, still has a long runway, for sure. So we'll have to see. I think right now, and we've talked about this before, like if everybody and their dog decided they wanted to go to an electric vehicle tomorrow, I don't think our grid could actually support it. And keep in mind, this is a grid that a lot of these AI centers that are being built, they're taking a lot of that power. They're taking a lot of that power. So that is something to think about. Jim says, I can see that people have had a hard time with their loans in my town. There's a lot of houses on the market right now, and the number of new listings is growing faster than sales. Yeah. Yeah, no, there's a lot of people struggling. Absolutely. So when you look at the loan loss provisionings of the banks when it comes to mortgages, it's not like they're just, it's not like they're putting away a couple $100 million to pay, to absorb these losses. They're putting away billions of dollars. So that's a lot of people. We could get to a situation like if you guys, I don't know if you guys remember back in the day of the financial crisis in the United States with the housing collapse, there got to a point that there was a lot of people homeless because they lost their houses and a lot of empty houses just sitting there because there was nobody to buy them. I don't want to see that in Canada. Because you imagine you'd have these big homeless camps in some of the cities, and we've already got these, where you got people living in tents, and then you got a whole bunch of empty houses with nobody living in them. So, yeah, not good. Not good at all. Lisa's in the house. Let's see. Hi, everybody. I hope you are all well. Sorry, haven't been around much. Been enjoying the outdoor activities lately. Oh, there's nothing wrong with that. There's a beautiful thing. You can watch the stream on the replay. If it's volleyball weather, get out there and, hit the ball and come watch this later. That's the way I look at it. Let's see. Cowboy says, seeing the same. It's scary out there. That's amazing. Thanks. You're welcome. Jim says, it's safer the more gas and oil by pipe than train. Yeah, absolutely. Absolutely. Less things can go wrong. But train is still not that. I mean, train, when you think of the sheer amount of stuff that's transported by train, and then you look at the occasional derailment, it's not that much. It is pretty safe, but still, yeah, you're right. Oil would definitely be safer. Jonathan's like, haha, I know that jingle. See? Casino Taxi. Me and Jonathan know the Casino Taxi. Ironically, now I don't know anymore, but like here, I don't even know if you can get a taxi in Ottawa anymore. It's all Uber and Lyft. Now I know when I was last living in Nova Scotia back around 2020, it was still mostly taxis. So hopefully we got a lot more Ubers and Lyfts and stuff in Halifax nowadays. Let's see. Rory says, Jim, I still remember the lac magnet explosions because of human error on the rail co. Oh, boy. Let's see. Steve, the Echo Terrorist says we don't need pipelines because we are at peak oil in 2029. You know what? People have been saying, oh, we're going to be at peak oil, and they have a date. Everybody does. I always take those with a grain of salt. I always take them with a grain of salt. Yeah. Let's see. It's diesel that has summer, winter. Okay, there we go. That makes a little bit more sense, actually. Jim says, Rory, the next town to at 140 kilometers, and I see 6 to 10 miles of trains carrying oil when I drive there. Oh, there we go. Oh, Nightbot really active here. Nightbot. Rory. Rory says, Jim, that's all we see driving from Lloydminster to Fort Saskatchewan. Let's see. You need a generator to travel in electric cars. Real smart. Yeah, I mean, that's the thing. You have to have that infrastructure in place for electric, especially when you start to get to rural places. I don't know. Electric may not always make sense, but, if all of the infrastructure was in place, but it's going to, I think that's a long ways away. Jim says Vancouver got one huge stock of empty new condos that no one's buying and massive homeless camps. Yeah. You see, there we go. That's a thing I don't want to see. Like, it's crazy for people to be living, outside when there's a whole bunch of empty houses that they could be using. Absolutely. Oh boy. And we were talking a little bit more about power and Bell, of course, and I mentioned this, I think, on the last market close, but they do have an AI play right now. So they've decided to get into the AI game. They announced that they're going to be opening 6 AI data centers in BC as part of a plan to basically create the largest AI compute project in Canada. They're calling it Bell AI Fabric. Now, it's going to help support Canadian businesses and governments, their AI needs for sure, ranging from things like strategy and application development to infrastructure deployment. Now, that first center is going to be in Kamloops, and they must have already been working on it because it's set to open this month in June. And a second one should be opening before the end of the year in Merritt. Now, after they're finished with BC, and this is something I did not know on the market close, but they're going to be expanding into Manitoba and Quebec. And here's something else I didn't know. I mentioned they were partnering with Grok. And as soon as I heard Grok, I'm thinking Elon Musk's XAI, but it's not. That one is actually spelled Grok. This Grok is Groq. So they're an advanced large language planning technology. And this one here, it's going to be combined with Bell's infrastructure, their extensive fiber infrastructure. And between the two of them, they're saying it's going to create a new standard in AI inference. It could be interesting. So as I mentioned before, this Grok is not the Elon Musk Grok. It is the other one. TELUS, interestingly enough, now I mentioned this, but TELUS also recently announced AI centers in BC and Quebec, and they've committed $70 billion over 5 years to Canadian infrastructure projects in AI. So it's going to be interesting. And we talked a lot about this with the telecommunications companies, that there's nowhere to grow, at least telecommunications. Why? It looks like at least Bell and TELUS, they're making movements into AI. And that could be very, very interesting to see how that all shakes down as we get there, of course. Farm Boy, back to the pipeline. So the pipeline only makes economic sense if OPEC is correct that developing nations will grow oil demand. With BYD dominating the global south, the IEA's prediction of peak oil demand in 2029 is likely. Okay. It'll be, I still take it with a grain of salt right now, but it'll be very, very interesting to see how that is all going to shape up. Now, when it comes to Canada, though, so that pipeline, the west-east, that's basically so we could sell our oil. In a nutshell, it opens up a lot more markets to us, and it opens up basically oil for our eastern side of the country as well. So it's a good thing. It's definitely a good thing. Cowboy says $1 million for a broom closet condos in Vancouver and Toronto. Yes. Yeah, some of them are small. Absolutely. Let's see. Kitimat. Kitimat is LNG shipping. Just saw an interview with Pierre on that. Interesting. I did not see that interview. Jim says Rupert got a big project going for shipping LNG, so liquefied natural gas. Interesting. All right, we're almost through the news. We got two stories left. The CRA, everybody's favorite group right now, they've got a little bit of a glitch. So TFSA information is currently unavailable on their online portals. So we're talking through My Account or Rep a Client. So this includes, of course, their contribution room, which is, of course, and we all know it. It's an essential piece of information you need to know because what happens if you over contribute? There's penalties. So yeah, right now it's not giving any useful information. The CRA says that the issue stems from delays in processing data from the financial institutions. So now we'll have to see. So apparently the dashboard has been offline since April 17th, and there's no timeline for its restoration at all. Now, there's been a lot of wider technical issues at the CRA. They've made some improvements. It used to be much worse than it is now, but right now there's been this whole like the TFSA glitch. It's basically the latest in a string of glitches. So earlier system updates were causing missing or duplicated tax slips. Some users not that long ago were receiving error messages whenever they tried to file electronically, and you guys probably know as well. They were having some issues with if you had any capital gains. You know, at one point you couldn't file with capital gains. So yeah, pretty good. Their autofill function also was having a problem with omitting slips. Oh my gosh. Yeah, so that's not good. But basically, impact wise, I think if you're in a situation where if you have a big chunk of money and you're like, all right, I need to know exactly how much space I have, those are the people who are going to be impacted the most because they're not going to be able to get, they're just not going to be able to get, they're not going to get anything. And the problem is if you do make an over contribution, you're looking at 1% per month on that on the excess amount. So if if you over contribute by $10, it's only 1% on that $10 each month. So it's not on your whole amount. It's just on the amount that you're over. But nonetheless, if you're over by a lot, that can add up pretty fast. Yeah, what can I say? Right now, I think first of all, I think the CRA needs to completely update a lot of their software. They need to have something a little bit more reliable for Canadians when it comes to tracking that the TFSA space for sure. I always say, track it yourself. Quite literally, track it yourself. Don't rely on the CRA. If anything, they're going to make money from you because they steered you wrong and you over contributed. So definitely something to keep in mind. Something to keep in mind. But yeah, right now, any amount of trust in the CRA's online systems is weak at best. Weak at best, and they need, honestly, they probably need to rebuild their whole system. It's probably not going to happen, but they do absolutely. Let's see. Cowboy says, "Isn't Mr. Wonderful building an AI in Grand Prairie?" Yes, I heard that. Yes, I think so. It's supposed to be one of the biggest AI centers in the world. But yeah, that, as far as I know, that's still going forward. I haven't heard anything. I haven't heard any updates on it. Yeah, just southeast of Grand Prairie, there was a site being proposed for it. Wealthsimper has a counter on your deposits. Yeah, that I saw that, Cowboy, and that I like that. I like that. And worst case scenario. I mean, worst case scenario. And this is, I don't even want to say worst case. The problem here is that if you haven't been tracking your TFSA and you've been growing things have been growing, things have been shrinking. It's really hard to get a good read on exactly where you're at. I'm thinking like, I'm kind of that person that I would be like, I'll over contribute a little bit just so I see how much they charge me. Then that way there I can figure out where that edge is. I would like, just edge it up a little bit. But nonetheless, even then, It's not like you're going to see those charges right away. You wouldn't even see them until tax time. So it's a mess. It's absolutely a mess. If you're a new investor, track your TFSA, folks. Track it. Absolutely. It's the best way to go. Brian says, getting here late. Good afternoon, everyone. I hit the like button for Mary. Awesome. 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 I love that. Cowboy, PEY is a good buy on the LNG side of the monthly stocks. And Bismarck, he says, I don't think Mr. Wonderful is so wonderful. I've heard that from more than one person. JJ is in the house with a hey. Rory says, isn't Capital Power involved in the Grand Prairie site? I don't know. That I don't know. Let's see. Driving at the moment, stuck on in a lot of traffic. Yikes. Yikes. Not good. All right, we got one final story. I can't believe we're finally at the end of the stories. All right, here we go. So fraud is on the rise. We've talked about this before, but there's been some new stats that have come out. So right now in 2024, Canadians lost over $647 million in fraud. Now that is up huge. Back in 2020, they did a study on it then, and that year it was 165 million. So that's a lot. That's like it's like what, roughly three times the fraud. That's crazy. Now in 2025, so in our first quarter of this year, there's been $163.5 million reported lost. Now, keep in mind, a lot of people don't report when they get scammed or frauded. So that number is probably much higher because of underreporting. Now, here's the thing, and this is why why the picture has an older lady in it. It's because seniors are the most targeted group according to the data that's been released. And well, it's because it's a lot easier. You got to look at it this way. These are, if you've got, especially seniors are at that point where, AI is probably confusing at best for not for all seniors. Some seniors have really adapted really well, but a lot of this rise in fraud, like I said, it's all linked to that emerging technology. So AI, cryptocurrency, and the scammers are just becoming more sophisticated using text, email, social media, and now, oh boy, deepfakes. Deepfakes is coming in there as well. These fraud tactics, they are constantly evolving, making detection increasingly difficult. I remember the old days when you could tell that an email was fraud because, well, there'd be a lot of broken English in it. There'd be a lot of there'd be broken English, there'd be grammatical errors, nice and easy to tell. Well, now AI fixes that all up. So now, it's going to be written well. AI can duplicate a voice. So you'll get a nice, you can get a nice clean voice, all of that. It's like crazy. It's getting easier and easier. You just got to be really, really careful. You got to be really careful out there. Keep in mind, things are being changed all the time. Like one of the recent scams, and I think we've talked about this before on the channel, is where they call up pretending to be a grandkid and say, "Hey, Gran, it's me. I need some money. I'm desperate." There's things like that. It's just, to me, it's sad because people fall for these things. And, and the worst thing is, it's not even, it's like big business. So there's places, for example, over in India. I don't want to pick on India, but there are some in India where they have call centers that are set up, and that's a person's job. Their job is to scam people, and they're probably not even being paid well. Like the people who own the call centers are making a ton of money, but there's just, it's crazy. And a lot of times too, there's even people, for example, who take jobs where they're just basically parcels are being sent to them and they just send the parcels to India. And I think they call them mules, but a lot of times these people don't even know that they're actually sending cash off to, or gift cards and stuff off to India. So it is pretty darn crazy out there. And of course, if it happens to you, you know, it kind of sucks. A lot of these folks, a lot of folks who get scammed and lose a lot of money. I mean, they can be experiencing everything from anxiety, depression, even PTSD, believe it or not. It's not good. It's not good. And in even the worst cases, some of these folks might be tempted towards doing some bad stuff to themselves. And as far as I'm concerned, we got to throw the book at these folks. I've been in tech for a while, and I've seen the evolution of the fraudsters and the scammers, and I absolutely despise them right across the board. And I always say, if you receive an offer on the internet and it is too good to be true, it is. It absolutely is. I will tell you right now, nobody's going to give you free crypto. Nobody's going to just hand you free money. Um, it's just the way it is. It's the way it is. And even in our community, I will tell you right now, we had over on the Facebook group, we had a couple people that snuck in and they started posting some WhatsApp stuff like, oh, come to this group over on WhatsApp. I deleted them and I banned them as quickly as I found them, but that happens, and it happens over on the Discord as well. It's just, oh my gosh, it's crazy how bad they are. So I will point this out, and I will mention to this guys, because sometimes they will join YouTube and they'll pretend to be me. I'm not gonna reach out to you with a deal about crypto. I'm not gonna reach out to you and try to get you to reach out to me on WhatsApp. It's not gonna happen. It's not gonna happen. I'll talk to you guys, and you guys know that, but I'm not, spewing deals and stuff like, no, it's not going to happen. Pretty much the only deal I spew is, it's like, hey, 4 supers and you get that bonus thing. That's about it. That's, oh boy. Anyway, just be careful out there, guys. It's not good. It's not good at all. All right. Just very quickly, before I finish off the news, I just want to point out we got a couple things coming up on the calendar this week. So we do have on Wednesday, we got that Bank of Canada rate decision. And on Friday, and this is another one, we got, oh boy, we got the jobs data dropping. So the jobs data is dropping, and we're going to be able to see if that unemployment has creeped up a bit. I'm not surprised. I will not be surprised if it does creep up at least a point. I don't like it. I don't like it, but what can I say? All right, guys, that's the news. The news is done. Yay. Now it's all you guys. It's all you guys. Brian says, I hear in Trump's big, beautiful bill that they might hit dividends in Canadian ETFs on US stocks. You are 100% right. Oh, sorry. Yeah, so they're looking at increasing. So right now, let's just take a company. So if a corporation has dividends with the US, a lot of them have deals where they're only paying like about a 5% withholding tax. So they want to take that up to 50%. And they're not going to do it right away. It's not going to go from 5 to 50. It's going to go from 5 to 10 to 15 to 20. So 5, basically an increment of 5. When it comes to people, so regular investors, we have 15% withholding tax. That's going to go to 20 to 25, 30 up to 50. They're going to do that. So it's going to take years for it to happen. It's going to start with, I believe it would begin at the beginning of 2026 with a 5% increase. So yes, it is going to hit. Now, some people have been like saying, oh my God, we're going to lose our tax-free status in the RRSP. It does not say that in the bill, but it is gray. So there is room for interpretation, but right now I think the TFSA, or sorry, the RRSP is still safe. Your TFSA is never safe. There's also concern as well. Like one of the things that happens is when you do get hit with taxes, so in a non-registered account, so if you have it in a personal account, you can normally apply for a foreign tax credit. Right now, there's no signs that the Canadian government's going to increase that tax credit. So basically, if you're getting that tax credit, it will still be the same amount. So you'll end up losing that additional 5%. So it's not looking good. Now, mind you, according to the bill, this is only if we get rid of the DST, then it goes away. That this all goes away. That's a good thing, because you got to keep in mind too. Some of the big companies, or some of the big, I don't want to call them companies, but take the Canadian Pension Plan Investment Board, so the CPPIB. They right now they pay very, very little tax on their investments, on their U.S. investments. That's going to change for them, so that's going to impact a lot of things. So yeah, it's not a good thing, but we'll have to see. So far, the government hasn't really addressed it, but we'll have to see if that changes. I hope that changes. Like I hate to give into, like, in a sense, it's blackmail. It's like, get rid of this, otherwise I'm doing this. I hate to give into blackmail. But I also don't really like the DST that much. So I'm kind of at split on what I'd like to see, like whether we should just, part of me is like, let's just get rid of the DST. I don't like it. Fine. We'll get rid of this problem. But then if you do that, then Trump's just going to blackmail you more the next time he wants stuff. But at the same time, he might still do that anyway. So yeah, I'm kind of split on it, but I want to see what the government plans to do about it. All right. Nathan says, back after a long while, not surprised to see you educate people with unique info they need to hear. Well, thank you, Nathan. I am good. Well, welcome back, first of all. And I'm glad you like the content. I'm glad you like it, for sure. Jim says, I had a scammer trying to get me to say yes this morning. Oh boy, yes. Here, I will tell you, this is kind of an older scam where they would call you up. So a scammer would call you on your phone, and they wouldn't say anything other than, can you hear me? Can you hear me? And you say yes. That's all they want. They want your yes, because then whatever product they want to sign you up to, they then can say, oh, we have the consent. Here's the yes. And they'll play that file. So yeah, be careful of that. If somebody ever calls and says, can you hear me? If you want to answer them, I'm not going to answer them. I'm just not. But if you want to, find a way to say it without saying yes. Like you could say something, for example, you could be like, the audio is coming in fine. There's a way to answer it. Sounds kind of dorky, but I didn't say yes. So just keep that in mind. Rory says it's like Terminator 2. What's wrong with Wolfie? Your foster parents bought the farm. Exactly. Now, as far as I know, most scammers are not made of liquid metal, but I don't know how far away we are from that. That's kind of scary. Cowboy says, I get friend requests from scammers pretending to be you. The spelling of Mountain Finance is wrong, and their member date is 2 days old. Yeah. And this is, guys, I will say this again. I've said this many, many times. When it comes to the Discord, there's a lot of great information over there. It's a great place to hang. It's a great place to ask questions, all of that fun stuff. But there's a lot of scammers that will come in and create these fake Mountain Finance accounts and try to friend you. So here's the way. This is my solution to that. Guys, I'm never going to send a friend request there. Even if I think you're the coolest person in the world, I will never do it. But I am absolutely okay with every single one of you sending me a friend request. I will say yes to all of them. That way, if you friend me, and I do reach out to you for whatever reason, then yeah, sure. That way there, 100% it's me. Cowboy, I will say, Cowboy friended me. And when Cowboy wants to get some information from me, Cowboy just messages me and I try to get back. Actually, today, Cowboy messaged me saying, where's the link for today's show? Now, that was a little late. I think I posted it like closer to 20 after 2. Normally, I have it up about 2, but I just said, yeah, I was late. I did just post it, but I sent him the link anyway at that point. So he knows it was safe because it came from me. So that's how I handle it over there. You know, don't worry about it. I will friend every single one of you. If you send me, I will say yes to every one of you guys, every one of you. Rory says, I hope Blossom filters out the scammers, especially if your portfolio is linked. Yeah, yeah. Um, yeah, I know they're working hard on stuff like that. Now, the nice thing is, even if your portfolio is linked, it's not really useful information. It doesn't really, it's just the way API keys work. It doesn't really give them any kind of access any way, shape, or form. But yeah, still, nonetheless, I think that's a high priority with Brandon and the gang. Let's see. The reason I didn't add anything like Blossom, yeah. And here's the thing with Blossom too, guys. You don't have to link your portfolio. You could just manually upload it if you want. Like if you want to show it off, or you want me to look at it, or something like that. Just manually enter it. Manually do it. It's fine. If anything, linking your portfolio itself, that, as far as I'm concerned, that's more of a convenience thing. It's more of a convenience thing. But if you were like, I don't want to do it, I'm afraid, nothing wrong with that. Just do it manually. And for depending on your broker, if your broker is not Wealth Simple or Quest Trade, you kind of have to do it manually anyway, because they don't yet have access to a lot of APIs. All right. Max says, thank you. Glad to catch up on a live stream again. Always good to have you here, Max. Always good to have you, for sure. Rory, I haven't done anything with Blossom yet. I'll never link my port, and that's fine. Like I said, manually do it. It's not that hard. It's not that hard. As soon as, and right now, I checked before the show. Blossom still won't let me do it yet on their desktop version. They just come out with a desktop version, so they're still working on it, still getting things set up on it. But nonetheless, as soon as that's up, I'll show you guys exactly how to do it. No problems there. It's too scary with internet scammers. Yeah, well, they're not going away. They're not going away. Now, eventually, though, if you guys heard about AI agents, so the way the AI agents are going to work, and this could be a good thing. This could actually be a good thing. Ideally, where they're heading with AI is that you won't even go on the internet anymore. The AI will do all of that. And that's going to really cut down on internet scammers, because, it's a lot harder to fool an AI than it's going to be to fool you. But yeah, so the AIs will be the only ones on the internet. It'll be all AI. But you will be, you'll be talking to your AI. It's like, hey, this is what I need, Dre. I'll give it to you. Or if you want to go on, maybe YouTube will be something a bit different, but it's going to be, I think AI and AI agents is probably going to isolate and make it a little bit harder for some of these scammers. But mind you, they're going to still keep trying. And as I mentioned before, deepfake, that makes it pretty scary. Because imagine if a scammer can go onto your Facebook, look at your pictures, and see what your grandkid looks like, then sends you a video or a FaceTime or something with a deep fake of that kid. And if you got a video, they could probably deep fake the voice too, saying, Granny, I'm in trouble. Granny, help me. I need money. If I don't get money, all of that. It's coming. It's absolutely coming. So you got to be really, really careful. Like even in the olden days of the internet, we're talking like 2000. I refused to open any attachments that came from my mom. Didn't matter what it was. I just knew my mom. Quite literally, every time I come out to visit my mom, I would have to spend a half an hour cleaning malware off her computer. So I would refuse to open anything she sent me. Just refuse. And she would ask me later, oh, what did you think of that thing I sent you? I'd be like, I don't know. I didn't look at it. And she'd be like, you're weird. I'm like, no, but you know what? I don't get viruses. A Cowboy says, I don't buy American stocks. 15% is too much, in my opinion. Yeah, absolutely. Absolutely. Now, keep in mind, if you're buying like really heavy growth stocks, US growth stocks, if anything, the dividend is so small. And when you look at 15% of a tiny dividend, it's like cents. Those ones they don't bother me that much, but it really boils down to you know, what's going on. And a lot of times too, you could still you can still gain your US exposure through ETFs or CDRs, for example. There's lots of ways to do it for sure. Let's see. Jim says, we got a set of instructions on the wall at work in case a scam makes through the company's server to us. Nice. It's good to see that companies are sort of thinking about that. And that's kind of a good thing, especially if you have PII, I think that's what it's called, personal identifiable information. So yeah, you definitely want to be very, very careful with stuff like that. Let's see. How can Trump think he can change Canadian tax policy? I would like to see a 7% flat tax. Then we could avoid things like food and homes. Yeah, I mean, I would love to see some tax reform in Canada for sure. People, a lot of times people complain. They're like, oh, well, you know what? The United States, they have such better taxes. They do, but they also have a much bigger population. So that means they have much more revenue on lower taxes. Is still a lot more money. But, I don't know. I can dream, I guess. I can certainly dream. Jay says, well, simple, just drop in what passive features. So far, it's still lacking graphs, but it might come in soon. Oh, that's interesting. Yeah. Now passive is just, I played with it a little bit a couple of years ago, but I think it would be fantastic if you do have Wealth Simple, and if they bring in the passive features, I think that would be a big plus, because it's one of the things that I would like to see in Wealth Simple is a lot more statistical stuff that you can do with your account. So that would be cool. Wait for the scammers to get an AI server. Oh, they probably already have a lot of them already are using AI to help them. So let's see. Wealth Simple calls it investing insight. Okay, interesting. Candace, did you have questions on Wealth Simple margin? Well, I didn't. A couple people in chat had a couple of questions on it. I can't remember what the questions were, unfortunately. Now, if any of you who had the questions on margin who were here on Friday, drop them in the chat. Drop them in the chat so JJ can take a look at them. All right, guys, we are getting towards the end here. If you got your last minute questions, it's time to get them in. But right now, I want to check the leaderboard. I want to check the leaderboard again, see where we're sitting at. Yeah, we still got Jonathan up at the top with 175 experience points. Let's see here. Now here's the beautiful. I guess this is kind of funny. W.A. Hipple is in second. I'm trying to think, who is W.A. Hipple? I'm not sure. Anyway, is that? Oh, that's Jim. That's Jim. Yeah, it doesn't show me your name. It just shows me your email, your email address. I was like, okay. Yeah, so yeah, Jim, you made it to second. And Rory's sitting in third with 150 experience points. All right, I love it. Cowboy says, if we only spend tax inside Canada, we could have better shape financially. Well, yeah, absolutely. Yeah, when you spend money in Canada, so when you buy Canadian, that money is going back into our economy. The taxes are staying in our economy. It is a good thing. I mean, it helps Canada overall. Absolutely. Yeah, anytime if you ever have a choice between a Canadian made or an American made product, especially if they're similar in price, buying local, and even not just Canada. I mean, buying local helps even more, like municipally wise. It helps it helps your municipality. Because taxes start all the way at the bottom and work their way up. Everybody has to have a piece of that pie. So you gotta like it. Well, I don't know if you gotta like it, but it's not a bad thing. It's not a bad thing for sure. I do like it. That is you. Yes, that is Jim. That's why I haven't got a chance to, every so often, like there's people who've been here for forever. I recognize their picture immediately. So Jonathan, recognize. Now, here's the thing. One of these days, Jonathan will come along and he'll change his profile picture. And then I'll be like, who is that JJ Montgo? And then I'll realize, well, with JJ, with Jonathan, I will know right away. So just something to keep in mind. So this week coming up, guys, we got two videos. We got our bank quarterly Q2 review that will be dropping on Tuesday, and on Friday, the 0 to 100K challenge. So we got both of those coming out this week. Keep in mind, if you are channel members get to see everything a day early. So they'll see the bank video tomorrow afternoon, and Thursday they'll get to see the other one as well. So that's a couple of the benefits that are in there for the channel members, of course. Cowboy says our government needs to stop doing foreign aid. That's a tricky one, right? You got to look at it this way. If every country in the world stopped doing foreign aid, then you're pretty much on your own when you get into trouble. And I mean, I know right now we're looking for aid when it comes to fighting fires in the prairies. I mean, those are pretty much out of control. So it's not good. It's not good that way. So you need to do some, but I think you need to be reasonable with the amount of foreign aid that you do, and be strategic for sure. Like people will still love you to death if you give them, $100 million in aid, instead of giving them maybe 200 million. You need to make sure you can afford it. And like I said, be a little strategic with it. And sometimes it doesn't even have to be cash, right? Like, for example, when California had the fires, we sent the firefighters. We sent the bombers from, we sent a bunch of bombers from Quebec. And then, of course, some American took one of them out with a drone. But, oh, boy. What can I say? Jay said, Loblaw once got caught putting maple leaf flag on certain products made in the USA. Yeah. And keep in mind, too, like there's a certain amount of rules. Like it comes down to how much of the product is made in Canada, how much of it's sourced from Canadian product goods. There's a whole bunch. It's really interesting when you look into it. So we'll have to see. Jim says, I try to buy every this I can from the stores in town that are locally owned, then BC owned, then Canadian owned. If I can do it that, I don't. If I can't do it that way, I don't need it. Yeah, okay, fair enough. Absolutely. And this is the beautiful thing. As interprovincial trade barriers start to fall, that will make it a little bit easier to stay within Canada when you can't get something in your province. Especially, for example, I think there used to be issues with getting, like, for example, BC ice wine. It was hard to get that in certain parts of the country. And now you should be able to get it everywhere once all of these barriers are gone. So, see, who's been helping us? We pay for the extra fire help. Yeah, in some cases we probably do. But nonetheless, if we don't have, like, I look at it this way, if we don't have the fire personnel, we have the fire personnel, but if we don't have enough, we're probably okay. If we have to pay, I would be okay with that. Like, I don't know if we're paying what we're paying them. I've never really looked too deeply into that. So, but yeah, nonetheless, and we do the same. Like, we often send firefighters to the US, all of that fun stuff. So, firefighters from South Africa sometimes come in. Yeah, absolutely. Like, I think, like last year, I think with the fires in Nova Scotia, we had people from all over the place over there fighting some of those fires, and they were crazy. Like, and this year's getting to be, at least in the prairies, it's getting to be pretty crazy in the prairies. Like, they're talking about evacuations like you've never seen before. So, it's not good. It's not good at all. So I am hoping that we get this under control sooner. And I'm hoping that this is not a preview of what we can expect this summer. But I will say, the U.S. may be in a lot of trouble this summer, not from fires, but from hurricanes. One of the things, this is supposed to be a bad year for hurricanes, and there's a big reason. One is when we have a system in the Pacific, so La Nina or El Nino, they both will create some upper level shear, which is basically strong winds that will move across into the into the Atlantic. And what these winds do is they weaken hurricanes because they can shear off some of the top of the hurricane, and that weakens them, making them not as powerful. But this year we got nothing. There's no El Nino, there's no La Nina, so we do not have these upper winds to shear away at hurricanes. So under those circumstances, hurricanes have that potential to get stronger. And you got stronger hurricanes coming, and you got the Trump administration. Well, what are they doing? They're reducing what NOAA can do. They cut a lot of their personnel. They cut some of the hurricane hunter stuff. So they're not going to be as prepared as they normally would be for a year when things could be really bad. Mind you, this is also not a good year for the east coast of Canada. There's always that chance we could get some pretty nasty hurricanes that might make it up that far. We'll have to see. Hopefully not, but it could happen. Cowboy says, yes, the South Americans were paid and the South African government were caught stealing that payment. Oh, God, during the Fort Mac fires. Okay. I don't like to hear that. Rory, it's lightning and hail season too now. Oh, yes. Calgary is in a part of Canada that's actually nicknamed Hailstone Alley. It's sort of like Tornado Alley in the U.S., but instead it's for hailstorms. And they've had epic hailstorms in Calgary. In fact, in a year when they have some epic hailstorms, you can usually get some deals on some hail damaged cars afterwards. So, but yeah, they definitely have a lot of hail for sure. And Bismarck, this is great. Trump has a Sharpie. America will be fine. Yes. And you guys probably remember that year he added to a hurricane, one of the diagrams from NOAA. He basically put his own little extra bit with a Sharpie. Oh, boy. That's hilarious. Absolutely hilarious. The Sharpie tells Trump what to do. I wish a Sharpie would tell Trump what to do. Because a Sharpie might have more common sense. It might have more common sense, but maybe not. According to Brian, it's a dull Sharpie. A dull Sharpie. All right, guys. Holy banana bread. We went about 2 hours and 18 minutes. Before I go, I need to refresh this community board one more time. Jonathan, I am so sorry. Rory has taken over. Rory has won today. Rory is the king of chat. He has come in with 225 experience points. Jonathan came in second, 175, and Cowboy comes in with the bronze medal at 100. Actually, no, both Cowboy and Jonathan, they're technically tied for silver. That might mean I can give the bronze then to Jim. Jim with 150 experience points. There we go. Fantastic. This is great. I kind of like this little leaderboard. It's kind of neat. All right, guys. I will be back live-wise. I'll be back on Wednesday. We'll have the market close, see what's going on, talk about what happened with the rate hike or the lack of rate hike, and any ramifications or fallout from the tariff. So we will have all of that. We will have all of that on Wednesday. Until then, guys, this has been another fantastic afternoon. You guys all rock. I'll see you guys on Wednesday. Take